there is one stock that is about to skyrocket. It is a bet on the small cap market. So rate cuts came in at 25 basis points. So whatever that is, 0.25%. And that was expected. And it wasn't bigger than expected. Small caps need low rates because these companies are basically startups and they need to get loans. So with that, and also with the great run we've had in September, small caps could be a little overbought. So there is one ticker that benefits in this situation. It's TZA. It goes up when small caps don't do so well. It's not financial advice. Let's jump into what we're talking about here.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So this is TZA. Direction is the provider. And you can see in the background the market. You can see this thing is doing the opposite of the market, right? So really what we're expecting is the market to go down a bit, but not actually the market. What this thing actually does, I just don't have it in the background, is it does the opposite of the Russell or the IWM, so the small cap market. So important distinction there. And you might say, well, why isn't this thing just going to go up forever? And I'm not going to say you're wrong. But if gold is any indication recently, that sometimes things that seem like they're going to go up forever take a turn. You know, if dust is any indication, so this thing goes up when gold goes down. GLL goes up when gold goes down. This is the kind of bouncing ball skyrocket activity that TZA could experience here. Definitely quite a lot of volume coming in here. So we'll see. Gonna have to watch Jerome Powell, watch rate cuts. This is pretty ugly. 1, 2, 3, 4 red days in a row. I'm not saying that hasn't rebounded in the past. This is a great example in the end of July. But this also, was a bounce off this moving average and a basically test of levels going back to when the tariffs were initially announced. So this time might be different. All I'm saying is this doesn't look so great. Now, as far as rate cuts and essentially how that was received, Jay Powell said there's another rate cut in December, probably, right, in his language, not a foregone conclusion. With the government being shut down, we don't get data, which is, he's basically flying blind. So when that government shutdown comes back online, things could change. That data that we get will, for example, be how many people, because the government does provide this data through the, it's called the Commitment of Traders. It's through the, I think, Chicago Board of Trade. Don't quote me on that, where it's out of, but that's very easily Googleable, chatable. Basically, it says there's a lot of people who are long the small cap index right now who are on the speculator end of the spectrum. So they have to register as either professionals, institutions, or speculators. And as the name suggests, speculators sometimes are wrong, right? So they get very excited when the party's kind of over. And if the party is over, this is going to roll over a little bit. I'm not saying we're going to go into a bear market, but this thing could go up. As you see, it did go up in tariff times. And again, I'm not even saying the whole market is going to, go into a little rollover, because in fact, just today, over the weekend, with Trump and Xi having an agreement, that's going to help a lot of the big stocks and many stocks that are tariff related. Even if you're seeing this video, on Monday, tomorrow, these rare earth stocks might have a little bid. I don't love them, especially not going into earnings. And these are penny stocks. I mean, CRML is back down to levels seen in February, right? But this could shape up. There could be, people really like to buy stocks on Monday. So I'm not going to throw out ideas like this because, people are busy. And the smarter thing is to say, hey, what's something I can take a look at buying Monday, Tuesday, or Wednesday, or Thursday, or keep an eye on for next week, or maybe the week after. The idea here is this is the way to do that, okay? The way to take a bet on, very educated bet, that maybe there's going to be some cooling off in small caps and everything except the Mag 7, right? The Mag 7, which make up 40% of the market almost, are not in this whole conversation. So they could do great, and this small caps could still not do great, and this ticker could go up. All of those things could be, and in the context of this trade idea actually happening, will be true. It's nothing to do with Mag 7's performance. So we're going to get this data: non-farm payrolls, unemployment rate, CPI, PCE, all the numbers that everyone is focused on. We don't have to focus on them in detail. In my opinion, macro is not predictable. What is predictable is saying, if there is some news that comes out, if the Fed does in December, not lower rates, then, or if they don't lower rates by more than 25 basis points, then basically small caps are going to suffer. So this ticker could go up. That's the whole play, really. Same move as what happened with this inverse gold dust and GLL bounce here. So that's the idea. If you like these short and sweet ideas, hit that like button. If you want a free course on how to buy stocks before they go up, hit that subscribe, and you'll see that in the first subscribers in the post section. I'll post that once a month. And if you're low on time, head over to stockscommunity.com or hit that join button, and you'll get videos before they're released to the public. You'll also get Q&A, so you can ask me anything about your portfolio in a group chat format. It's called Discord, but there are members only live streams there. Hope this helps. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.